This situation is getting crazy, it's getting out of control, and it's happening very, very fast. Not only has AMC been falling through the floor, but crypto has also been falling through a floor, and there seems to be no bottom in sight. You now have Ethereum, which is trading down 9% in the last 24 hours. If we click on Coinbase market cap, or coin market cap, I should say, Bitcoin is down 33.31% in 7 days. Ethereum down 35% in 7 days. This is creating wealth destruction, the likes of which we have never seen before. The notional dollar value of wealth destruction is getting absolutely ridiculous. Crypto was under a $1 trillion market cap like a week ago, right? Before this 30% drop, 35% drop on Ethereum. Bitcoin now trading at $18,998. This is a really, really big deal for a lot of different reasons. That's what I want to get into here in this video, and potentially why this could be worse than what's happening in the equity markets, how this could drag on the equity markets and really be a big thorn in the sides of our backs for quite a long amount of time. Now let's dive into the information here in this video. If you guys want to come trade with me live in real time, link down below in the pinned comment. We have been doing very, very well as of recently, and it's really helped out the portfolios when, you know, everything else is going down. At least you have something that is winning for you, and a lot of that is done with options. So know the risk with trading options before you even join that. But nonetheless, guys, okay, so let's talk about crypto and why this is so different and why this is such a big deal. And the first thing that I want to start with, there's multiple pieces to this, but there's one main point. The first thing I want to start with is the size of money, the amount of money that was in crypto. At the peak, there was over $2 trillion in the crypto markets. Now you're sitting at $838.69 billion, which is still a lot of money, but it's not nearly what it used to be at the peak, right? Bitcoin is down like 60% from its peak. Ethereum is down like 80% from its peak. So there has been a lot of wealth destruction in crypto, but the reason wealth is being destructed in crypto is the same as equity markets, right? The initial reason why crypto started to go down in November, just like the NASDAQ, is because the Fed is raising rates. We've never had crypto accounts in a market environment where interest rates are going through the roof. We have been in a low rate regime for the last 15 years, and we don't know what it's like in recent times to have higher interest rates, which is starting to happen. So that's the initial reason why crypto fell. But on top of that, the lack of transparency in crypto is really going to hurt it for a long period of time. And what I mean by that is, out of nowhere, you have Celsius that comes out and is having a lot of liquidity issues, so they stopped all withdrawals, right? That's not good. You know what that does? That creates lack of trust. It kills trust. So now people are looking at, you know, Gemini, Coinbase, FTX, other platforms, and they're like, hey, are they gonna do that to me, especially if crypto continues to fall? Because in the grand scope of things, Bitcoin in the last 2 years is still up over 100%. It's still, you know, even from the COVID bottoms, returned a lot to those initial investors. So a lot of people are down substantially in their crypto positions. And even if the brokerages are going to not let you withdraw, then what is really going on under the surface? At the same time, hedge fund 3 Arrows fails to meet lender margin calls. And that's definitely causing a lot of fear, and it makes you wonder how much leverage is actually going on under the surface. And then you have Terra Luna that essentially goes to zero overnight. Really makes you question what the hell is going on, and the lack of transparency in crypto markets is a lot different than like equity markets, like buying a stock. If you buy a stock in a company, they are supposed to have their results audited, so you know that they are factual to, plus or minus 1%, whatever the margin of error is for earnings reports. I believe plus or minus 0.5%, 1%, whatever it is. That's all fine and dandy. At least you have a glimpse into what's going on. With crypto, you have no idea. So it creates a really bad environment, bad psychology. Like right now, I don't want to buy any cryptos besides Ethereum and Bitcoin, and I'm not even jumping at that. Not because, I don't think they will make money, but what's going to be the next one that falls? What's going to be what's actually going on? How much leverage is there? Is it all going to fail because everyone's leveraged out and everyone's going to take massive hits? Not even the crypto brokerages can stay in business, right? That's what Celsius is showing us. So it's like nowhere is safe, especially in crypto, and the lack of transparency is really hurting crypto markets, and it's going to take years to get trust back. People are not going to forget about Terra Luna overnight. They're not going to forget about Celsius not letting people withdraw their money, and whatever else happens from here, it's going to take a while. And that's going to be a big thorn in the sides of markets' backs, because you start to get this wealth destruction effect where if you had gains in crypto, you wanted to go out and buy a house. Maybe you did, but now your remaining crypto is down through the ground, obviously. Your housing values start to fall. Maybe you have a portfolio at the same time that starts to fall. So you start to get destroyed just on all different aspects. And when you throw in leverage and margin in that equation, you can start to push and pull from different assets a lot. Like if you had a lot of margin in your crypto accounts, for an example, and you had a stock portfolio, well, if you get margin called in your crypto portfolios, you're probably going to have to break the piggy bank on your stock portfolio to pay for that. And considering the size of crypto as an asset class, still $800 billion, like that's more than all of the margin that is reported to us by over $100 billion, right? So take all the margin in the markets and add another $100 billion onto that. That's the size of the crypto market still today. It used to be much more. So that's why this is such a big problem for equity markets, for all markets, really. They're going to feed into each other. And it wouldn't surprise me after seeing crypto falling this much over the weekend that it does directly feed off into markets, and markets likely fall as well. So that is that. I do want to talk about AMC as well. But first, we did have a very large option expiration on Friday. It was like $3 trillion. So we did see a slightly green day. It was very back and forth, but we did close the day green. In the NASDAQ, it was a lot more on the green side. I believe over 1% green for the NASDAQ on Friday. And with that $3 trillion expiration, a lot more money is going to be able to flow around to different places, right? So once you get your money back, once you get paid out on your options, you sell your stock that you had to exercise, whatever it is, you can go out and say, hey, do I think the next month or 2 months or 3 months is going to be bullish or bearish, and how should I position for that? And I think just given the NASDAQ is down, 31.5% in 6 months, I don't see why on a risk to reward, basis or a risk management basis, you would say, hey, I expect there to be more downside from here than potential upside. Now, when you get down to Fed meetings and you get down to, maybe July 28th, right? That's where you could potentially see more downside, even July 28th being the first day we could go into a technical recession. That is the day that we do get the advanced estimates of Q2 GDP. But really from now until that next big expiration, July 15th, I think you could have a very bullish reaction until something else breaks, until you get a large bankruptcy like Kevin O'Leary is looking forward to, right? Until you get more fear and that just total capitulation, which we've started to see that. But once you really get that, that's when you ultimately will hit that bottom and slowly start to trend upwards. But we have a lack of data over the next couple of weeks. We don't have a Fed meeting. We're really going to be subject to retail sales that comes out not this week, but next week, and a couple other key data points. But I think you could see a shorter term bottom unless crypto does ruin the party for the stock market as well. We will obviously see. I do think there is more downside to come after July. Really, I think the end of call it summer, even October, November, that's probably when you do get a bottom, potentially when the Fed does start to slow down raising rates, because rates will be much higher by then. So that's kind of what I'm looking forward to. I think you could be a little bit more bullish over the next, 1 to 3 weeks, but after that, you're probably going to see more downside, and that's how I am definitely looking to trade the next couple of weeks. Now for AMC stock, we know the Ortex numbers do finalize, today, Saturday. You can get changes overnight. They can do weird things, but coming by Saturday, these are the refreshed numbers. Not to say they are 100% accurate, but they are the numbers we are getting. Of 22.69% short interest of free float, 117 million shares sold short, cost bar minimum of 15%, cost bar average of 19.18%, cost bar max of 21.07%, 100% share utilization, days to cover at 3.78, shares out on loan 195.76 million, almost 196 million, free flow out on loan 38%. The option activity about 21% positive, 22 orders totaling $1.92 million, so not very positive whatsoever. Now the last thing I do want to say about the whole crypto situation, essentially, if hedge funds start to, go under, that's going to dry up liquidity even more. As you can see right here, it says, even this article says, Bitcoin falls, Celsius insolvency risk grows and parallels to the 2008 recession, CNBC's Crypto World. They're comparing this to the 2008 recession. And what happened during that? Well, liquidity becomes very scarce and it dries up. Nobody wants to lend out money. And once you do get catalyst, with stocks that have 20-30% short interest, that's where you can really start to see some pretty aggressive rallies, especially if the free float is locked up so much, like it is for AMC. So I'm very excited about what I'm seeing, just the overall next couple of years, being able to add and add to these positions that I really like for the long term, to buy and hold them. So 5-10 years from now, we're chilling on a yacht, $1 million yacht, doing whatever the hell you want to do, right? That's what this period of your life should be about, no matter what age you are, is acquiring positions in quality companies that can survive the worst case scenario and come out in a much better place, because that is, after all, what will always happen with the American stock market. So that is going to be all for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Get your free stock with Webull, Moomoo, and Public down below in the description of this video. And if you guys want to come trade with me live in real time, link down below in the pinned comment, as well as in the description. We have been killing it over there. Would love to have you check it out. Thank you guys for watching. Enjoy the rest of your weekends, and I will see you in the next one.